Hello and welcome to the week ahead video with me, David Madden. Now before I take a look at the major events of next week, let's take a quick moment to recap the major events of the week just gone. Yesterday we saw a large sell-off in global stock markets as fears that the US economy could be heading for a recession took hold, and we saw a sharp decline in the US500, which fell to its lowest level in 19 months, which really highlights how bearish the recent downward move has been. 2 days ago, on Wednesday, the Federal Reserve, the US Central Bank, hiked interest rates by 75 basis points. It was a larger hike than expected, as economists were predicting a hike of 50 basis points. Along with that update, the US Central Bank cautioned that the likelihood of a recession in the US has increased ever so slightly, and that sentiment engulfed markets yesterday, hence why we saw a sharp move to the downside in US stock markets, and also we saw losses on the US dollar. Taking a look at the price action on the US500 recently, we can see it's been clearly in a downtrend. And why is this important for next week? Well, next Wednesday and Thursday, Jerome Powell, the head of the Federal Reserve, will testify to US policymakers, US politicians, and any kind of commentary or analysis he provides on the health of the US economy could see an increase in volatility for not only the US500 but US stocks in general, and indeed equity markets around the world. Taking a look at the price action of the US500, while it continues to hold below these three simple moving averages, it's likely the more medium-term bearish trend will continue. Moving lower from here, we could see it retest 36.04, and a break below that could see a target 35.88. Looking at the price action in the short term, the last few hours, we can see the market has rebounded. It's off its recent lows. The RSI has returned from being in oversold territory to rebounding out of it. The move higher in the RSI indicates the price bias is to the upside. If we do see a continuation of the short-term upward move in the US500, resistance might be encountered from this simple moving average here, which comes to play at 37.47, and a break above that could see a target this zone here at 38.41. Also next week, on Wednesday, we have UK CPI. Now, part of the reason why we've had numerous interest rate hikes from the Bank of England, including one only yesterday, was because of the high level of CPI in the UK. CPI in the UK is at its highest level in 40 years, and it's a major concern for the Bank of England. Taking a look at the price action on the British pound in the past 24 hours, we saw it rally yesterday as the Bank of England hiked interest rates, but also I mentioned the concerns about a possible recession in the United States weighed on the US dollar, so it was a double whammy for GBPRUSD, so it rose for a couple of reasons. While the currency pair continues to hold above these two simple moving averages, it's likely the short-term upward trend will continue. A rally from here could see an encounter resistance from this simple moving average here, which comes to play at 1.2445, and a break above that could see a target this zone here at 1.2598. Even though the more short-term trend for the currency pair is higher, it's worth noting the more longer-term trend for the currency pair is lower. If GBPUSD fails to reclaim this simple moving average here in at 1.2445, that could be an early indication that the longer-term downtrend is still in effect. A move to the downside could see it retest 1.2040, and a break below that could see it retest 1.1932. So just to recap, on Wednesday next week we have the UK CPI reading. Also next week on Wednesday Wednesday and Thursday we have an update from Jerome Powell, the head of the Federal Reserve. That's all from me. Thank you very much.